Hello, this is Zak Mir with the Bulletin Board Heroes on Wednesday, the 7th of November. Starting off with 88 Energy and nice gap to the upside here today above the 50-day moving average at 1.08, the blue line there. And obviously we've had this triangle or wedge breakout since the end of October. Initial target here, the 200-day moving average at 1.6 pence, while we hold above the 50-day line on an end-of-day close basis. Next up, the stock, well, one of the stocks at the moment, I suppose, Angus Energy. Interesting that the shares have remained well above the placing price at 9 pence, or I think it was 8.5, 9 pence, I think it was, which is nice. They also closed that gap yesterday, closed above the top of that gap at 12.5 pence, so especially while we're above 12.5, looking forward to a retest of the best levels, 15, 16 pence over the next few sessions. Hopefully, only really back below what 10.5, 11 pence, really questioning the upside argument at the moment. Cabot Energy is next, and here we've got, well, the reason for mentioning it really is the gap through the 50-day moving average, the blue line there at 2.06 pence. Nice turnaround there for the shares. I suppose we've had a breakout also through this formation here, hence the reason for inclusion today. While we remain above that resistance line from May, which I suppose is around 1.7 pence, 1.75, well, 1.8 pence in fact, looking for at least 2.5, and about after that, the 200-day moving average just under 3.5 pence. So nice, as I said, a nice decent turnaround there. Good bullish divergence going into this since August as well, so something else for the bulls to latch onto. Kibo is next. Here we've got that long candle there, which is a nice bear trap flushing everybody out below 2 pence. And while we're above 2 pence, looking for a break towards 3 to maybe 3.25 pence of the 50-day moving average for this particular situation. Ideally, we close above this line today to give us confidence that the shares are turning around. Incredible chart here at Lansdowne Oil Gas. I've talked about it quite a few times. I think the only tricky thing here was really that pullback from what's that, 2.4 pence back towards the 50-day line, little bear trap below that, and then sharply up now. Best case scenario target here up to 4 pence, especially while we hold above that old spike. Well, I suppose what's that, 2.58 pence. It's a nice stop loss area as well for people to try and chase that 4 pence area. If you are a bit cautious, maybe you wait for any pullback towards the 2.5 pence area before pressing the buy button. Another stock in focus today is Orosur Mining. Just looks like it's breaking out of this pullback that we had, the falling wedge that we had since the September peak through 12 pence. This is a positive situation anyway, because we've had that what I call the rocket launcher move through the 50-day moving average in early September. It was a bear trap gap reversal through the 50-day line, so very solid situation there. The stock obviously is just trying to flush out the weak hands below the 200-day moving average. Back above the 50-day average now, and really while we're holding above that at 6.9 pence, a retest of 12 pence plus looks to be on the cards there. A nice looking chart as well at Predator Oil and Gas. Here we had a sort of similar actual pullback there from the September peak, but much more vicious back below the 50-day line. Interesting is that the way the 50-day line is rising so sharply, and we've also punched back above it today at 6.33 pence. End of day close above 6.5 should be enough to take us towards at least 10 pence, maybe up to 12 to 13 pence of that May resistance line projection. So everything to play for there on Predator. Finishing off with one of the more controversial stocks on the market. A bit of a false break there for Versarien through that line, the downtrend line from, or the resistance line there from the beginning of last month. Probably have another go. Needs to close above, I suppose, 125, 127 today or over the next few days in order to give us the confidence that the shares can get back to the dizzy heights of £1.80 plus. No hurry, I think, there now to get into this situation, because obviously if we do get above the that resistance line on the next attempt, hopefully we should stay above it. But one to keep an eye on at least. Only back below the 200-day moving average at 112 pence now would cause any concern. That's it from me. More updates tomorrow.